Jack Janasiewicz, Natixis Global Asset Management Portfolio Strategist. Jack, good to talk to you today. We heard the Fed chair say that we have to be humble and a bit nimble, especially as it relates to some of these inflation fears that's persisted. You know, Brian pointing to a key line we heard from Jay Powell, which is if we have to raise rates more over time, we will use our tools to get inflation under control. What did you make of that statement?
And this is, I think, something that the Fed and Chair Powell has been talking about for quite some time. I think the way I would simply describe that is it's the optionality and it's the flexibility that the Fed has been trying to say that it's willing to demonstrate going forward. If the numbers come in hotter, they're willing to react to that. If the numbers are coming in maybe a little bit looser or a little bit easier, a little bit softer, they're willing to react to that. So the point being, they're trying to maintain that flexibility, let the data come to them as opposed to forecasting. I think that's been a little bit of a change in terms of how the Fed has been proceeding relative to maybe previous Feds. But it comes back to that same thing that he's been saying repeatedly, optionality, flexibility. We're going to be adjusting as the data tells us to adjust.
Yeah, Jack, I think that was pretty interesting to hear here, too, when we're talking about the two fronts, the dual mandates there on price stability and the labor market. And really, we heard Jay Powell kind of talking about how those two play together. Just want to play what he said a minute ago and get your reaction on the other side. Take a listen.
To get the kind of very strong labor market we want with high participation, it's going to take a long expansion. We can see that participation is moving only very slowly. And to get a long expansion, we're going to need price stability. Right. And so in a way, high inflation is a severe threat to the achievement of maximum employment and to achieving a long expansion that can give us that.
So look, to me, I mean, that sounds like a pretty patient Jerome Powell there, maybe stepping a bit off the hawkish stance. I mean, how do you listen to the tone he's using there and maybe put it into context with the market reaction we're seeing right now?
And I think this is spot on, right? It's funny, when I was taking notes during the press conference, that sort of segment I thought was the key to this whole sort of takeaway, if you will. But you know, I think the Fed's modus operandus here is a little bit different than maybe some people are expecting. And what do I mean by that? Well, it certainly seems when you look at what's being priced in with rate markets, right? The March meeting's certainly in play. Rate expectations, I think now are up to 75% for a hike. June is still pretty elevated. But if you look out to September and December, they've been around a coin flip 50-50, and they really haven't moved in the last couple of months here. So rate expectations certainly seem to be pulled forward. And I think that is going to do some of the heavy lifting, right? We heard a lot of talk about financial conditions. We're seeing a modest tightening of financial conditions on the back of this, which is what the Fed wants, but it's also trying to buy some time in here. The Fed, I would say, maybe is somewhat stalling as well to let the data play itself out. So listen, we can hike rates maybe in March because basically the market's giving it to them. But I also think you're going to hear a lot more about balance sheet talk. You're going to hear about forward guidance and a little bit more of a more hawkish tone on that front, sort of let maybe the markets do some of that financial tightening. It buys time because I think the balance sheet is less impactful for the global economy or the U.S. economy, more so than the balance sheet is. That buys them time to see how the data comes in. Maybe we start to get a little bit of easing with supply chain issues, maybe some of those bottlenecking in the labor market issues start to ease up a bit, and that gives them a little bit more time to digest those numbers. So that sort of, I think, hiatus that we're trying to build in here, that cushion, that's exactly what I think you're hitting on here. Buy some time, let the numbers speak for themselves, but in the interim, let's rely on the balance sheet in terms of trying to keep inflation expectations somewhat contained.
In terms of buying time, you know, you mentioned the supply chain bottlenecks that we've been watching. Certainly that has been a big part of some of the pressures that we've seen build up on the price side. We heard Jay Powell say today that he doesn't really decisively want to say that things have improved. If anything, what the disruptions we've seen during the pandemic have shown just the fragility of the global supply chain. He seemed to suggest that this is going to drag on, you know, well, potentially into the second half of the year. What's your outlook on that front?
Yeah, and this is one of the big wild cards, I think, when we start to think about how the inflation dynamics will continue to unfold. You know, I sort of laugh and sort of tongue-in-cheek talk about the fact that they retired transitory, but if you look at their comments, if you hear what he said today, you look at some of the from the Fed minutes, they still reference the concept of transitory. They just don't want to call it transitory. So the point being here is I think they expect that if COVID starts to become under control, as things start to normalize, that supply side of the demand supply imbalance maybe starts to loosen up, and we'll start to see some of those inflation prints ease up a bit. And that's, again, part of that thesis where I think they're trying to buy a little bit of time for the second half of the year. Listen, transitory is very definitional, right? To me, transitory simply means it's not permanent. Some people try to put an end date on transitory, and I think that's a little bit misleading. But the point being, some of this is going to eventually go away, solve COVID. If we get COVID under control, a lot of this starts to clean up. The question is, how long does it take? And I think that is sort of the key issue, because it's then becoming a political thing, especially when you think about midterm elections coming up. The Fed, inflation, that becomes the political punching bag. And that's the key risk, I think, in here in terms of thinking about this as well.
Yeah, I guess, Jack, just lastly to wrap up here, I mean, when we're looking at it, you were taking notes, I was taking notes. We were seeing markets swing, the 10-year moving lower off of that confirmation here. I mean, does it change the playbook at all in your mind in terms of where we are? If we're seeing markets move higher today, could it maybe be in the short term a bit of a turnaround from the sell-off to start the year?
Yeah, and I think it all comes down to expectations, right? And coming in this morning, when I checked the Fed hikes for this year, we're almost at pricing in a full 4 hikes between now and the end of the year, 3 for next year. A lot of talk on a lot of the news publication sites, for example, that maybe we need to have 5 or 6 hikes. And then you start hearing about balance sheet runoff and then even selling off some of the balance sheet. So, maybe we're getting to the point where we're hitting peak hawkishness from expectations. I think the commentary today from Powell was somewhat taking the edge off of that. And so to me, the incremental move has to be even more hawkish than what's already out there. That's pretty tough, I think, given the backdrop that I just outlined. So, maybe with that sort of more dovish tilt, if you will, that puts a little bit of support into the marketplace, because quite frankly, I thought coming in today, we were getting some pretty hawkish expectations by the markets here. And that's what I think we saw with regard to some of the price action in the run-up to this week.
Well, good to get your analysis on the back of the testimony today. Janasiewicz, Natixis Global Asset Management Portfolio Strategist. Appreciate you taking the time.